Let's go. So I want to make this really quick and simple because this is a pretty complicated subject, and really it's just not supposed to be that complicated, if I'm going to be honest. So really we're just going to be talking about fundamental analysis and technical analysis. So if you're wanting to get into day trading, you need to know these in order to really know where to go, because basically most people fall under two camps, whether it's going to be fundamental analysis or technical analysis. There are two whole different ways of looking at the market, and sometimes you can even really intermingle those two to get a better idea of what's going on. So to know where to start and to know what you need to learn, you need to know exactly what camp you fall into. This channel is going to be a lot more about technical analysis, so fundamental analysis, if that's more of your groove, there's plenty of channels and videos out there, but I'll definitely try and plan to create that kind of content in the future. Don't want to leave anybody out. But when it comes to fundamental analysis, really the definition comes down to measuring a security's intrinsic value by examining related economic and financial factors. For example, earning statements, company missions and policies, innovations they make, etc. That kind of stuff. So, for example, it'd be just as simple as saying, oh yeah, I like Tesla because they make EV cars.
No, people are nervous and they're worried. You are aware of that. So knowing that, why would you do an April Fool's joke that you did?
Oh, because there were all these media articles saying that Tesla's going bankrupt.
Yes.
So I thought, well, I'll just do an April Fool's joke that we did go bankrupt.
That's fundamental analysis. And a lot of people, especially getting into day trading or trading in general, when it comes to investing, they usually get in, they think like that, you know, oh, I like this company because of X reason, or I like this other company because of Y reason. They think that really they just have a lot of more room to grow. That's a really good reason to get into fundamental analysis. And so when it comes to the pros and cons of that, the pros really just being that you can be a master of a specific market. So really you can just learn exactly how the stock market works, the relationships between the companies and the policies they make and the world events that revolve around those specific industries, that kind of stuff. You can really hone in and get the pulse on what exactly is happening there. Another is that it can be very long-term profitable, because usually you're just, you know, as we discussed in the last video, you're pretty much doing spot trading. A lot of the times, if you're doing fundamental analysis, you're buying shares or just straight up cryptocurrency, and usually things do go up, so you're going to make money. Most of the time, you're going to fucking make money. It also is really easy to pick up for some people, because they already kind of have a mind of, you know, thinking about what's the next big thing, you know, oh, I like Tesla, that kind of thing. I mean, all I can really talk about is Tesla, because that's the easiest example. So it is very easy to pick up, and it is the most straightforward way to invest. And I say this because all it really takes is for you to open a Robinhood account or a Webull account and just throw money into it and put money where you think is best. That's all it takes. And it also is usually better for long-term oriented goals, because, you know, you're buying and hoping stuff goes up, and usually, like I said, things do go up over time. So cons for it is that it requires a learned tuition or gut feeling to be truly a master at it. And I say that because Warren Buffett didn't get that way, because the way he is right now, extremely rich, right? Because he just he had a feeling, you know, or he just threw money somewhere. He had a gut feeling. He used his intuition. He was really smart about where he put his money, and he's where he is because of those decisions. And usually another con is that not everything is clear cut. So a really good example is Johnson & Johnson, when they decided to jump on the vaccine gang, along with Moderna and Pfizer and all that other stuff. Probably investors or people who were looking to invest in Johnson & Johnson were pretty skeptical of that, because either it's going to go really well or it's going to go really bad. So it's not so clear cut where you have to, you know, kind of make a judgment call in that sort of situation. It's slow rolling. It takes a long time to really build up over time. And also it is usually isolated to your market. So if you are a fundamental analysis trader in stocks, usually stay to stocks. It's kind of hard to apply that to crypto, because, you know, you have a steamroll of information, and you know how things are usually interconnected with each other. You have your people who you know who to listen to when it comes to this kind of stuff. You know, it's very deep roots. It's kind of hard to uproot that and move it to somewhere else. And like I said, just in that example, it takes in-depth knowledge of your market and where to pay attention to really be successful in that. So onto technical analysis, really, where my bread and butter is. The definition is using market activity, historical returns, chart patterns, or math-based indicators to base your trading decisions on. Examples of that are like moving averages, stochastics, Bollinger Bands, candlestick patterns, or Fibonacci's. all that kind of cool stuff. And so basically it's just a very math-based, calculative approach to trading. It's all based off probability. Pros for it is it allows you to be a jack of all trades when it comes to moving between markets like stocks and crypto. And that's why I can have both my feet in, or both my toes in crypto and in stocks, because I found a way to be profitable in both off technical analysis. I can just look at the price, apply the same principles I use for the other markets, and change it around a little bit because it is different. It's not exactly the same, and I can still be profitable just fine. So, and that's the cool part about it too. And also because the time frame for the trades are shorter, usually it's within the same day, it's not usually more than a couple of days, you're able to make more profit off of the general moves than if you just held over time. So that's why you can get larger returns if done correctly in the same time horizon as fundamental analysis. Another pro rather is a higher confidence in trading decisions. Like I said, it's probability based. You've already ran your numbers. You already know what the success rate is for your trades. So you already know overall in the long run, if you stay dedicated and consistent, you will win in the long run. Predictability, like I said, just goes right back to probability and statistical trading. You know what your numbers are. You know you're probably going to make it if you apply those same principles and you keep to your rules and you stay consistent. It's that easy. And it's also a lot easier to determine if you should jump into a trade, because usually it requires a mathematical approach to it, where it's just one thing crossing over the other means an entry, and maybe some other indicators you throw into the mix as well. Just makes it that much easier to jump into a trade. It's not like I wonder what the effect of the X is on Y. It's just, it says it's good to go. Good to go into the trade. That easy. And also for the cons, really going on to the downsides of it, and these are pretty heavy because I've experienced a lot of them personally, is that it is very, very frustrating to find a system that works for you. Because I could even suggest you a system and it might not work for you because it doesn't fit your personality, it doesn't really fit the time that you want to allocate to it, maybe it doesn't fit your return goals, all this other stuff. It's really hard to find something that will work for you and something that you can stick with. It's pretty challenging. It's like a diet, really. It kind of is. And it's also, there's an overwhelming amount of indicators and systems to choose from. There's a lot out there, and it's pretty hard to find good relevant information when it comes to that, besides just support and resistance, that kind of bullshit. Trust me, I hated that shit too. So it's difficult to find something, again, that works. It's very, very easy to lose money if you don't know what you're doing. And what I mean by that is that if you just go into some sort of trading system or indicator that you really don't have experience with and you throw money at it, 9 times out of 10 you're going to lose money. Plenty of scam courses out there and holy grail systems. And you probably see them a lot if you watch YouTube and you don't have an ad blocker on. If you see the ads for it, you're going to get a shit ton of them. And I promise you, none of them work. I mean, they may have money back guarantees and plenty of, like testimonies, but just you're better off just avoiding those. And it's just a nuisance. And also requires a large amount of consistency, patience, and discipline. I promise you, if you don't stick to your rules that you set they're going to put you in the green, you're not going to get in the green. It will be the difference between you actually making a lot of money doing this and you losing your ass. I promise you. But so basically, I just wanted to make this video real quick just so you can understand, where, you want to put yourself when it comes to trading. I like technical analysis because of those pros. It's very clear cut. It's very simple when it comes to actually applying it, but it is very difficult to find a system that works. Fundamental analysis, it's easier to get into, but when you're actually practicing it, it takes a lot of time and experience and exposure to the markets to really know what kind of judgment calls you should make and if they're the appropriate ones in the first place. So anyways, that kind of wraps it up for this video. I'm going to make a little bit more, TA or technical analysis specific videos in the future. I will make more fundamental analysis related videos after I feel like I've kind of explained it well enough. So yeah, definitely look out for those. Don't forget to subscribe and like the video if you did enjoy it. And I'll go ahead and see you guys in the next one. See ya.